If you have not heard of tax-free savings accounts or started contributing to one, you're missing out on an opportunity to grow your money tax-free. Hi, I'm Raylene. Welcome back to my channel. In this video, we will go over everything you need to know about tax-free savings accounts. Tax-free savings account, or TFSA, was introduced in 2009. It is a tax-advantaged savings account registered with the Canadian federal government as an incentive for eligible Canadians to save. It is designed to help you save for both short-term goals like a car or a home and long-term goals such as retirement. You can think of it like a basket that allows you to hold qualified investments that may generate capital gains, interest, or dividend tax-free. Unlike a traditional savings account that only holds cash, a TFSA lets you hold a diverse number of investments depending on what your financial institution offers, such as cash, mutual funds, GICs, stocks and bonds, or ETFs. Each investment type differs in its advantages and disadvantages based on your savings goal. It is recommended that you consult with your financial institution to determine which option may be best for you. Keep in mind that you cannot day trade stocks in your TFSA. TFSAs are available to every Canadian. To open a TFSA account, you must be a Canadian resident with a social insurance number and 18 years of age or the age of majority in your province or territory. If you become a non-resident of Canada after opening a TFSA, you can keep your TFSA and will not be taxed in Canada on any earnings in the account or on withdrawals. However, if you make a contribution while you're a non-resident, except certain exceptions, you will be subject to a 1% tax on each month the contribution remains in the account. You may be liable for other taxes too. Also, TFSA contribution room will not accumulate any year during which you are a non-resident of Canada throughout the entire year. While the contribution limit for 2023 is $6,500, you can also make up for any unused contribution room from the previous years, since it is cumulative. This limit is set by Canada Revenue Agency and can change from year to year. You can add money in small amounts throughout the year or make a large contribution all at once. When TFSA was introduced in 2009, the contribution limit was $5,000, and it has increased since then. In 2015, the contribution limit was $10,000. Your TFSA contribution room starts at 18 years of age or the age of majority in your province or territory. So if you were 18 before 2009, and if you have never contributed to TFSA, your contribution room in 2023 would be $88,000. The best way to know how much you can contribute for the current year is to check your most recent Notice of Assessment from Canada Revenue Agency. There are many benefits of using a TFSA to save. Added flexibility. It offers you a flexibility to save for different long-term or short-term goals. It can help you reach your saving goals, and you can withdraw your money whenever you need it. Tax-free growth. You pay no tax on any investment income you may earn in your TFSA, and you can hold a variety of qualified investments as mentioned earlier. The higher the return potential on your investments, the faster your savings may grow. Tax-free retirement planning. A TFSA can complement your personal RSP by providing additional tax-advantaged savings. When you have no more RSP contribution room, or if you're over the age of 71 and not allowed to hold a RSP anymore. Making withdrawals. Whenever you're ready to use your funds, you can withdraw at any time without paying any taxes. Withdrawals get added back to your unused contribution room, but you have to wait until the next year or later to recontribute these amounts. It does not affect government benefits. It will not affect your eligibility for income-based government credits or benefits such as Canada Child Tax Benefit or Old Age Security. Because you can open as many TFSAs as you want, it is easy to lose track of how much you're contributing. At any time in a year, if you contribute more than your available TFSA contribution room, you will have to pay a penalty tax of 1% each month on excess contribution until it is withdrawn. Keep in mind that if you withdraw and recontribute to your TFSA in the same year, it could result in an over-contribution status. You can withdraw at any time for any reason without tax consequences. Keep in mind that the timing of your withdrawal may depend on what you've invested in. The amount that you take out is added back to your contribution limit at the start of the next calendar year. For example, if you reach your contribution limit and you withdraw $2,000 from your TFSA this year, you will have to wait until January 1st of next year to recontribute the $2,000. While your investment gains are not taxed in Canada, not all your investment gains in your TFSA are tax-free. U.S. dividends generated in a TFSA are subject to a withholding tax on behalf of the Internal Revenue Services. This includes large U.S. blue-chip companies that Canadians love to own. It also includes U.S. mutual funds and ETFs, and even Canadian mutual funds and ETFs that holds U.S. equities. The spike in interest rates last year is also a great opportunity for you to take advantage of TFSAs through high interest savings account and fixed income if you're risk averse, which are currently providing up to 4 to 5% of returns. In fact, the tax advantage from fixed income in TFSA is greater because it would be fully taxed in a non-registered account, compared with only half of capital gains from stocks or equity funds. Remember, TFSA contributions cannot be deducted from your taxable income. If you found this video to be helpful, or if there is any subject that you would like to know, leave a comment below. Thank you for watching, and I will see you in my next video.